Yeah, Tuesday, the 2nd of January, 2018. Welcome, everybody, to the first daily market commentary of the new year. I am your host, Chuck Fulkerson. So glad you could join me today for our session. Hope everybody had a great trading day. For those of you that are new to the channel, welcome. Glad you're able to find it. For those of you that are returning, thanks for coming back. Hopefully you guys had a nice, safe, happy, healthy new year, and I wish every single one of you nothing but the absolute best for 2018. I think that's as everybody does, and I've already broken my New Year's resolutions, which is why I don't make them. No. So for those of you new to the channel, we do the same thing every day here on the Daily Market Commentary. We look at the same 10 to 12 futures markets, and we identify potential trading opportunities, and then we update them throughout the day as trades happen on the Twitter feed, for those of you that follow me on Twitter. The most important thing, though, is we don't take off the lines, which means we are held accountable to the trades that we talk about in the daily market commentary. So let's go ahead and dive right into it. The first one being the S&P. Now, in the S&P 500, on the last DMC of the year, I talked about that I expected a pullback, and that's exactly what we got, was a little bit of a profit-taking pullback. I will tell you, I was looking forward to I saw that Europe was down this morning, and I saw that the European stock market was down about 0.5%, and I was excited. I thought, yes, we're going to be down too, and we weren't. Matter of fact, we never got to as low as we ended on Friday. And started the year actually a bit higher than where we ended on Friday, and just continued to trade up throughout the day. I was really hoping to get down into this potential buying area, which is kind of a fair price value zone, where we saw this explosive move up. Price was not able to get back to that area, so I was not able to get filled on that particular position. The S&P, we're just about to a brand new all-time high, not quite there yet. But listening to a lot of I call them the talking heads on TV, although I guess now that you guys don't see me as often in front of physical people, I'm just another talking head. But most of the talking head / experts were saying that 2018 seems to be a year where they anticipate continued growth in the markets, and I think that there's no reason to go against that for right now. I'm still not shorting this market. I've said that from day one. I'm not going to short this market when we're at or near an all-time high. So even though we've got some potential selling pressure right here, I'm not going to take it. I'm not going to be baited into that. More on that in a minute. Now, if you go to a small time frame area, you may get an opportunity to re-engage on the big picture uptrend with a pullback into this area here, but I think you've got a better opportunity in some other markets. Let's go look at the Nasdaq. So looking at the Nasdaq, here was our area where we anticipated a turnaround, and this is exactly where we fell to on Friday. So as I like to say, skadoosh, as the markets hit that area, giving you a potential entry, and then have, boom, rallied up ever since then. I will tell you, though, I did anticipate potentially having a short right in through here. I thought, well, we've got a lower swing high, a lower swing low. Let's go ahead and give it a try on the short. So you get it on the long, you get out here, and then you take a little short, and you get a little move on it. Just enough to move your stop to break even, and then you miss out on all this. This is why I say it over and over again. Don't short an all-time high. Don't pull on Superman's cape, and don't spit into the wind. And I didn't listen to my own rules. So instead of me catching this entire run up like I'd love to say that I did, I didn't. Caught a little bit on the way down, and then missed all the fun stuff. So take that as a lesson. I say it over and over and over again, and I didn't do it myself. I hope some of you said, Chuck is a complete nutter, and I think he's crazy, and I'm not going to take that short, and I'm going to let my long keep running. And I really hope you did that. And if you didn't, sorry. But I think that there's still some positions in here. So obviously we're going to remove this area right here. This is no longer valid. I'm going to leave this area as is, but I'm going to change the line. Now, when I change the line, I'm going to change it to a dashed line. I still think that there's probably still some buying pressure in this area, but I'm not as confident with it, so I'm going to wait for price to come in, and then I would get long as it starts to come back out. Getting long as it comes back out might be a better opportunity. Now, if you want to get in, there is going to be, I think, a potential little area in here that might be an exciting spot. Now, this is a tiny, tiny area. Matter of fact, I got to go down to a 5-minute time period to really find it and look at it. And it would be this area here over these two wicks that kind of overlap each other, and this little bit of fair price area before a move up. Now, this is not a phenomenal, super great area. It's actually going to be a lot higher risk. So I'm going to put that. We always put our lower probability levels in purple because they're found on smaller time periods. Although the smaller time period level that we found earlier seemed to work out really, really well for us. So I'm going to mark this one off as a potential, but just know that it was found on a 5-minute chart. If I go down to a 15, that area really winds up being this little candle here and then the bottom of this one here. So it's kind of a, for some people, they're not going to want to take a zone this wide on a small time frame area. You might even have another opportunity somewhere down here as another chance to possibly get long on a pullback. But this, you could get a little move out of here. Be aware of the arrival. The arrival's got to have a little bit of strength to it for me to really, kind of appreciate that for what it is. And if I look at that on an hourly chart, it's this area kind of right through here. So it's fairly wide. You might be better off in this area down here, but it depends on your risk tolerance. I'm going to leave this on here as a mark for those of you that have a higher degree of risk. I will tell you, if I don't have a really nice, strong move down into this area, I'm not going to take it. That is really going to be key. If we come down here and we chop, I'm probably not interested in it for the most part. So just keep that in mind. All right, crude oil. So crude oil, we are actually. I'm gonna extend this to the right. Look at our rising trend line here. We're still a little bit above our rising trend line. And matter of fact, I'm going to throw this on here. I always find this interesting to do. So if I think of this as a trend channel, that we have here, if I add a middle line in here, just add a middle line right through here. This is really the line that we've been hovering on, right? This kind of middle line is what we're hovering on. I'd love to see a little bit of a pullback in here, but we may not even get that. We may just continue to bounce up from here. There's really no great stopping points in oil on the big picture above us. And so I'm starting to get a little bit more bullish on oil and on energy in particular. Was actually talking to somebody yesterday about energy being a potential pop, because if we can get through, let me move this to a weekly time period. If we can get through this area here, which is now, once again, we're looking here at a chart which has all of the contracts kind of mixed in. So this area doesn't even necessarily show up on every contract. Like, let's say, for example, mind you, I'm looking at a weekly chart. Let's say we go out longer term. Let's do the CLH18. So we're looking at the March 2000, CLH8. The March 18 contract, we're not going to see, that area show up, right? Matter of fact, if I go out even to a date, you're not going to see those areas show up. So when you just use the straight CL, you're going to see those contracts from further back on the weekly chart. Now, but it's different price levels in here, but there may be enough people looking at this that if price gets above here, I think it's very easy to run up to this around $80 a barrel range. So I think there's some bullish sentiment overall in oil. Obviously, I'm not going to be married to that opinion. You don't necessarily want to have your own opinions. You don't want to be tied to an opinion, but we've got a pretty nice, strong upward trend. I'd like to get long on a pullback into a quality buying area where it's been shown to be a fair price value area. Right now, we don't have that. Right now, that's not showing up really on the charts. So I'm using the trend lines as a potential tool to use to tell me where there's a chance that I may be able to get in on this thing. Now, this is really one of those opportunities where a lot of people will use an indicator, like maybe a Bollinger Band, as a tool to get in and really look at like maybe a regression to the mean kind of concept. If I just throw on And I'm not those of you that have traded with me in the past know that I'm not a humongous indicator guy, but you can see that our Bollinger Bands, we've pulled below, let's see, hourly. We've pulled below on the hourly. On the daily, we are riding really the top of that Bollinger Band. So we're a little bit extended. So a little bit of a pullback, right to this mean would actually be a pretty good buying opportunity. So I'm not adding any more lines, any more areas. I just wanted to kind of put those in perspective so that you could see why we have those areas chosen that we do. And if you're a little bit more aggressive, maybe you buy on a maybe a candle to candle style of trade when price gets above this 20-period moving average above the mean. So just an idea, something to consider. Gold. So for those of you that are still in the candle-to-candle gold trade, I posted this, I tweeted this out a bit earlier. We have not had a lower low in gold since the 12th of December. Every single day has had a higher low in gold since the 12th of December. And somebody asked me today, they said, do you have a profit target on your candle-to-candle style of trading? And my answer was, technically, if I can find an opposing fair price area on the bigger picture, then I will oftentimes get out. More often than not, I'm just going to keep moving up the stop. We had put this area here as a potential to get short on a trade if price comes into the area and trades out. So for those of you that were that did take that one, you did get a little bit of a move into the area. I want to see a slightly deeper move, but you may have gotten filled on this one, and if you did, you probably got stopped out shortly after. But if you're still in the long, then you're allowing that thing to continue to run. So I think my advice yesterday was if you're in the long, let it keep running. If you're in the short, be aware that you're going very much against the big picture. So it was a little higher risk scenario. And gold has been a parabolic move up from 1240. What was that? 1238 to 1319. So very, very strong move. I think that we pulled up another opportunity here. If price does come back into this area, you may have another opportunity to get long on a bit of a pullback, especially with that whole round number support, which was an area that in the past had acted as resistance. All right, let's look at our bond trade. So we talked about a candle-to-candle trade in the bonds, and this is why we do the candle-to-candle style. So yesterday, we had talked about that it was showing some weakness, and on the candle-to-candle style of trading, you don't get out until you get a lower low. Well, today we got that lower low on the bonds. But if you were doing that candle-to-candle style of trading, that means that you enter on a higher high, and you're out at the lower low. So that means that you have the entry here, and you're stopped out here. So you still picked up a little bit of a move, and your risk the whole time would have been below that low. So it wound up being about a 3-to-1 reward to risk on that one if you were willing to take it. I'm going to remove these lines completely, however, today, as these ones are no longer going to be valid. And I do think that we could be starting to look, overall, the bonds have really showed a lot of weakness here recently, straight down for weeks. If you look at the price of these bonds, they've gone down for a number of weeks. Now, you may still be getting a yield out of these bonds, but if you're in the futures contract, you've got pretty much an elevator going down. So I would look for maybe a breakdown trade below this area here. Now, this is the weekly time period, so I'm not going to find anything on the small time period right now. There's nothing that's sticking out at me on the smaller time period, except for maybe this area right up in here. But I'm just not sure that we'll even make it back up to that region. Okay, so there's our bonds. The Aussie, for those of you that took the Aussie long and have been able to hold on, so our breakout on the Aussie, I said move your stop up to break even, so now that has continued to rally up. You may want to move your stop up if you're a little bit more risk averse. Move your stop up to below the last swing low on the hourly time period, which would put you right about 78.14. That's going to lock in a bit of profit, so that one is moving along nicely. So for those of you that took the breakout long, hip hip hooray. Or maybe it's ziggy zoggy, oi, oi, oi. That's an old TV show. If anybody knows that show, I'll be really impressed. All right, here's the another trade that we looked at on the euro. Now, the euro we found on a 4-hour time period, and that was this little bit of consolidation before a strong rally in price. Price has not come back down to this fair price value area yet, but I'm going to leave this one in play. Canadian dollar. Wherefore art thou Canadian? We're still running straight up 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row of just straight up movement. This would have been a good candle-to-candle style of trade, but, you know, shoulda, woulda, coulda. 3 richest men that ever lived. We may get a bit of a reversal here. I'm not going to rely on it because I feel like I'd be trying to swim upstream, and so I'm going to leave it be until we get to this area up in here. British pound, we had the breakout from here. So the breakout trade on the British pound is continuing to run. We had talked about on the DMC yesterday that if we get above this high, then there's really nothing to stop us from continuing to run significantly higher in the British pound. There's a lot of movement in there, and we're seeing a lot of this is really due to the fact that we've got weakness in the overall U.S. dollar. That's why these currencies are giving us a lot of opportunities on some of these longs. The Japanese yen today, I do like this much of a this little. I'll call it an ABC, as I've got a friend who trades that way. He's a big ABC style trader, but this is about a 23.6 retracement from this move up. So you might actually look for a bit of a reversal, and this 61.8 extension would actually come in line perfectly with what could be a good opportunity to sell short somewhere up in here. So looking at this Japanese yen, if you are interested in a candle-to-candle style of a long, you'd wait for price to get above probably this swing high and then get in and then allow it to run, moving your stop the whole time. So that's something worth looking at and worth considering. Well, with that being said, I went a little longer today than I have been in a while. I want to turn this thing off. I hope you guys, if you have any questions or anything that you want to address, certainly feel free to reach out. 2017 was a really big year. Was a really big year as I started doing these videos and started doing IIE Financial, which is our financial advisory service. If anybody, as 2018 is brand new, if anybody knows anybody, or you yourself, or you've got friends or family that wonder what they're going to do with their money, or wonder what they're going to do with the new tax code, how's that going to affect them, just shoot them my information. Send me an info. My email address is chuck@iiefinancial.com, or just go to our website, iiefinancial.com. It's greatly appreciated. And if I can help them out, I will. And if not, that's okay. It's always good to talk to people as much as I can to do my best and help them out. So please reach out. Let me know if there's anything I can do for you. So thanks so much, everybody. Till tomorrow. See you soon.